it's UPBOptionMillionaires.com on this Tuesday, January 12, 2016. After the closing bell, thanks for tuning in. We'll go over some charts here. And if you look, the crude oil future chart continues to break down over 2.5% today, despite the bounce we saw with equities. And if you look, trend line you draw in either direction, a horizontal, vertical, diagonal, upside down, any trend line you draw for crude oil has been broken as far as support's concerned. So now it's just a matter of looking at, hey, as crude oil continues to fall in price, at some point, the supply is going to shrink as all of these oil producers shut down. They say 30% of them belly up at these prices heading into 2016. We'll see if that happens, which of course is weighing on the stock market. It's going to weigh on the banks because there's a whole lot of debt. A lot of the junk debt out there is energy related, and if we see that go belly up, look out below. So at some point, though, with these companies cutting back and closing down, there's going to be a point where demand finally catches up with supply, and actually we're going to start to see a spike. When that comes, I have no idea, but it's going to be very lucrative. I think XLE is going to be a good indication here as it trades down. 50 is long-term trend line support. We'll get into that in a minute. But look at S&P 500 futures, folks. Just clean off your chairs of all the vomit. I mean, if you were in, if this was a roller coaster, folks, there'd be a line for about 3 hours. You can see the bounces we've had throughout just the start of this week. But if you look intraday, we looked on a precipice of another collapse. And just like that, the spike release reverses. You can see this nice bottom here. Closed up near the highs of the session. After hours pulled back a little bit. Well, we'll see, though. Possibly a constructive bottom has been made. No confirmation yet as far as a buy signal is concerned, but we're getting very close. The U.S. dollar index, something to watch, too. It's 2016, but look at this intraday topping pattern. The U.S. dollar index could be pulling back here short term, which would bode well for the stock market. I think ultimately, though, in 2016, we're going to break out. And we've already started this breakout from even the start of last year. We got into triple digits, got back into it at the end of last year. Pulled back a little bit. Mario Draghi helped push that down. So let's look at some charts here because it's certainly an interesting time here for the marketplace. Have we hit a bottom? Is this the start of a massive bear market? I bring up the VXX because this is something now intraday that you can look for. You see it down over 5%. Something that I was watching earlier in the session as the market was pulling back. The VXX was, it wasn't seeing that surge that we've seen the last couple weeks. And if you'll look at it, we're starting to pull back a little bit here. We are starting to pull back. If you look at the August crash, these levels, we got a little overexcited here. We started to pull back down to under 20. So here we are again. Nice spike up yesterday. Today, long wick there. These prices are getting rejected, which I know VXX using it as some sort of an indicator. Kind of asinine, but if you look, it's worked pretty well. Here you go, draw a trend line across, support here. It looks to me like we're heading back to 20, and what would that mean? That's going to mean stock prices are going to head higher here in the short to medium term. And if you look, the wicks that we saw for the VXX to the top side, those higher prices are getting rejected. Same here, what we're starting to see at the start of the week for the SPY ETF, the S&P 500 ETF, the spiders, the SPY. Getting rejected first started at 190, and today, another breakdown, we put in a higher low, which is a pretty good thing here for the market. If we can start to move higher, we need to really get up to 200 here in the next week or so, because if not, we're consolidating here for a nice bear flag. If you look at the August pullback, we got some bounces, but ultimately came back to retest our lows at the end of September before making a meaningful multi-month low that we could constructively go long on. And you can see this possibly is going to set up again. That'd be quite confounding. And I talked about in 2015 to wrap up how the trendless market, we went up and down, but we really didn't go anywhere. We closed 2015 almost where we started it. Would hate to see that again for 2016, but it's a distinct possibility. Let's look at the QQQ, the NASDAQ. Similar thing here. It's right in the middle of the range here. If you draw a trend line, go back a couple years on the QQQ, and you can see the breakdown. Broke out to record highs. Now we're right in the middle of this channel, so support's just under 100. You see long-term trend line supports all the way down in the low 90s. IWM really, and they talked about it, the tech wreck of 2014, the canary in the coal mine. When the small caps were breaking down, they were talking about, hey, this is something that's going to be awful for the market, and then suddenly we just reversed course in April of 2014. And small caps followed suit. Pulled back later in 2014, and then we rallied up to record highs for the small caps in the middle of 2015. Got over the 125 level, almost 130. We found support at 120, and then we found support at 110. And now we found support just over 100, similar support that we saw towards the end of 2014. So if you want to look from a support perspective for a possible bounce in the market, I think the IWM is telling you, at least short term, We could be looking at a nice little bottom here, possibly get up to 110 before maybe resumption of downside. But for now, this is a good spot here. You can see, again, another rejection of the prices. We found support, rejected. Possible move coming up to 111. Also, if you look, some of the indicators were starting to get pretty oversold, and we're getting a buy trigger that we've seen in the past back in 2014. You can see the Ebola lows. That's the ones we matched there. Breaking out of this oversold level. We saw the same thing back, and the crash back in August, and we're seeing it now. We're just bouncing back up. And so that's something to keep an eye on. These have been great buy points, and if you look at the market over the last couple of years, they've been pretty reliable as far as overbought and oversold has been concerned for the broader indices. I like to say indices. XLE, also watch this. Long-term trendline support for XLE does the energy ETF, and I think it's going to snap back to $60. Possibly by Friday. I know that's crazy to even bring that up and think about it. We're now $5 away, almost a 10% move that needs to happen in 3 trading sessions. But guess what? It's been a dramatic decline, 67.50. All the way down to, what are we at, 53 and change today? Unbelievable. Long-term trendline support, again, back to 2011. You look at that at the around 50 level. I don't think we're going to get to that. And look, some of these trend lines that I drew previously, have to extend them. So we're nearing the channel support. Even a bounce up to 67.50 would not negate a longer-term bearish move for energy if we continue to break down. But we will bounce, folks. We will bounce. The world is not coming to an end, at least not yet. And the bond market is shaping up. TLT, I talk about this one. Heading into 2016, prices are compressing here. I think we're going to break down. Some people have said we're going to break up. That's why it's a market, folks. Nobody knows for sure. There's probably a song out there that'll talk about the bond market in years ahead. I don't know. I just made it up. It's not even funny. But if you look TLT, I think it's going to break down also 10-year Treasury note. As the Federal Reserve tries to raise interest rates in a declining growth environment. Let's look at a couple other tickers here. Stock tickers. Apple. Apple, look at this chart. Very bearish. Rotten Apple, and you can see it doesn't look so nice on the 10-year. We zoom in. Looks even worse here. Again, you got to extend some of these lines. Extension. And you see we've broken out of this bearish pattern, this topping pattern. I think we're going to bounce back up a little bit, but ultimately back to the 80s. Talked about this even before the year started. We came up to that key 105 level. Gave it a kiss goodbye, and the GOOGL found support just above the gap price here that we saw from its earnings report late last year. Is it going to break down and close that gap? I think it, as well as Amazon, Netflix, Facebook even, are at one point in 2016 going to close their earning gaps. Close it. See how we closed our earning gap here from the August crash back in 2015? Gap closed. Gap not closed yet. So we've got this pocket here. This pocket that needs to get filled for GOOGL. And look at this chart for Facebook. Just such respect of trendline support. Hello, Facebook. Aside from that August collapse, the swoon, we have Facebook. Support bounce. Support bounce. It's been a methodical rally for the book of face. And you can see it again. We're just right about down to support this week. Bouncing. Are we going to get to new all-time record highs? Do I hear all-time record highs? I'm not so sure about that, but certainly something to keep an eye on going forward for Facebook. Support, we break it. 72.50 in focus. We hold it, back up to record highs. Simple as that. Let's look at consumer staples. Look at this. Finding support. This was starting to break down. Well, guess what? Found support. This is something to look at as well because looks like we're headed back to new all-time record highs. This is what's been leading the market, kind of telling you, hey, maybe it's not as bad as everybody thinks. I don't know. If the consumers are buying something, then they must have money. Well, where are they getting that money? A job, maybe? The government? I don't know. Does it really matter if they're buying crap? Then someone's selling crap. And if somebody's selling crap, that means they're making money. That means the economy's just not as bad as everybody thinks. How about Goldman Sachs? Look at this long-term trendline support here for Goldman. Spectacular. Look at a breakdown from record highs that we saw. This was everybody, higher interest rates is going to be great for the banks. And then not so great after all. Down $40 from its record high that we saw earlier in 2015. Long-term chart perspective. We're right at support, folks. But look at this pattern. Look at these lines. Look at the support. You draw a trend line across. We hit it all the way. But look at this. This would be a left shoulder. A right shoulder is over here. This is a head. This would be a head. Looks like we're going to break down. That would imply what? 145 possibly? Woo! We need to break that first. We could see a short-term bounce there for Goldman. Spectacular. I'm also in some JP Morgan Chase calls. Look at this. We're nearing the channeled support here as well. Oh, no. We were down big today, JP Morgan, after an early start, and then recovered those losses. Look at that. Look at that wick. There's no body. My goodness, it's on a diet. Must be abiding by those new sugar requirements from the, I don't know, the Drug and Food Administration Corporation. Disney. Wow, look at that, folks. The 100 level completely respected today. Put in a lower high in 2015, but if you look support, high support, you could draw it right across here. So that's what you're looking at for some of these charts. The fact that we're getting support levels hit and held. One thing not holding support, oh my goodness, Mr. Financial ETF. All right, and you can see the breakdown that we're getting here for the financials. This is not a good omen for the stock market. So let's see what happens in the days and weeks and months ahead for the financials. Because if they break down, all right, UBB or optionmillionaires.com. So it's been an interesting start to the week. We'll do one more bonus chart, the IBB. It's also been an interesting start to the 2016 year. I said we were going to come down to the August lows when I did my outlook for 2016. I didn't think it was going to happen in a week and a half. So, but again, if you look at the IBB, the biotech, finding support at the crash lows and the September lows of 2015. Also, look at the sell-off here. We're pretty robust, if I do say myself. So, if I do say myself. And we're getting a bounce, and we'll see if this bounce gets us back over 300, possibly 320, 325, 330, 335, 340, 40. That would get us up to trendline resistance here, 345. That would be something if you draw a trend line across 330, 345, back in there, and maybe pull back, and that would keep us in line with this trend that we had back at the end of September all the way through the end of the year. UBBOptionMillionaires.com. We'll see you in the chat rooms, shaping up for another tremendously exciting trading session tomorrow as prices gyrate all over the place. Where they stop, nobody knows, but judging from the charts that I'm looking at here, heading after the market closed, I think we're going to head higher. Higher, take me higher. All right, that's enough. Goodbye.